Good morning, everybody. Welcome to the Game Plan. My name is Gareth, Soloway, Chief Market Strategist here at VerifiedInvesting.com. Couple things to go over. Number one, today is a major day, but more so after the market closes when Nvidia reports earnings. So that is going to be the highlight of the day. But markets, again, fell yesterday. We saw a decent bounce towards the end of the day. But again, the key was the technical level I'm about to show you on the market. So follow me over here. Let's take a look at the pre-market action. And we can see here that for the most part, markets are slightly higher, right? This was yesterday's big dip early. You chopped around. Look at this trend line down here. I'll show you in a minute where that comes from. But then you bounced up and you kind of chopped into the end of the day. Overnight, we were floating up, and now we're kind of chopping with a little bit of selling here just over the last 20 minutes on this intraday S&P chart. So again, markets are trying to bounce just a tiny bit after some pretty nasty selling. A lot of the big names, Oklo, Palantir, APP, all of them getting hit in the last few days. Tremendous big drops there. Now, remember this trend line. I want to show you where this comes from right here. If we flip over to the daily chart, take a look at this. So this trend line is what we just saw on the intraday from yesterday. Look at how we tagged that line. Now, this line goes all the way back basically to lows from last August, and again, connects right through, and that was the low yesterday. We went down to the technical level, and sure enough, you can see we got a tail there, not a bottoming tail, mind you, but nonetheless a tail, and then markets today right here, we're trading up just a little bit. So getting a small technical bounce, that's very normal. Why? Because, again, even if the markets are starting to turn more bearish, you still have buy the dippers, you still have sentiment that is relatively good. But yesterday we did get consumer sentiment numbers, and again, this is consumer confidence, and it was basically the worst consumer confidence in 4 years. So the consumer is starting to feel the pinch, the worry about tariffs, inflation, the economy, all of these are bubbling up, and that is going to eventually take a cut out of the economy and the jobs numbers, and we'll see those jobs numbers, I believe, next Friday. We'll have to see what they are showing us. But nonetheless, S&P 500, very clear right here. We came down to this level and got a nice little bounce. The question is, how high do we go? Do we rally up here and then turn down? That would be kind of along the lines of what I'm looking at. And just to give you guys a sense of how I'm analyzing this, I'm taking the high here. This is the all-time high on the SPY or S&P, taking the low, and generally if we get a solid bounce, you look for about a 618 Fibonacci retrace, and then generally that's where the market could reverse to the downside. So a bounce to be expected, doesn't guarantee it, doesn't mean we have to bounce, but in general the buy the dippers are still out there. If we do bounce, I'm looking at that 618 Fibonacci retrace as the key level. All right, by the way, we'll go quickly to the NASDAQ chart here as well, because again, this one has definitively confirmed, but I just want to show you this on this. So again, same sort of thing. If we look at this low going back to January, the January dip low, look at the NASDAQ 100 here, or the NASDAQ composite. Look at how it went right to that level, and that's the level it found support. So again, same kind of deal here is you'd say, well, what kind of action would you potentially expect? Something like this, maybe even back to the scene of the crime, and then that next big sell-off were to come in. That would be, again, what you would generally expect. And again, the difference maker would be is if by chance the NASDAQ were to rally up and get above here, then that takes off the bearish case. But as long as we stay below this area right here, the bearish case now is in control, as we've now broken the uptrend here since August. All right, so again, just trying to give you guys an idea of what to look for. Now, let's go to Palantir. Palantir is bouncing today. It came and kissed my major technical support level right here, getting a small bounce. I still think it wants to come down and tag that level, but don't be surprised if we do get a short-term bounce here. So again, possible short-term bounce, maybe back up to this gap fill, and then that bigger rollover to the downside. Robinhood, take a look at this one, same thing. Major technical support down 1, 2, 3, 4, 5, 6 days in a row. Small bounce today. If it dips I am a buyer on the long side at around 42.80. So we are very close to some major technical supports on these. And then ACLO, this is one of my favorites. I actually put this out as a trade signal yesterday with Smart Money Stocks and ETFs members right down here, down 7 days in a row, right into technical support. And again, it is bouncing a little pre-market, but I think this one has a bigger bounce to it. The most prolific kind of momentum stocks, when they fall sharply, and they do fall sharply, they will also be the ones that have big bounces at some point. Maybe this one back into the $40 plus range after kissing $60 up here. Now, Nvidia. Let's talk some Nvidia here as we get into the charts. We have earnings today scheduled for about 4:20 p.m. I'm going to walk over to the big board here so we can look at this chart. The biggest thing to me, you have these two trend lines that have been keeping Nvidia kind of in check basically for the last 6 months to a year, right? So it's a lot of ups and downs. You've had big swings on Nvidia. In fact, right here was that day where it was down 17% in one single day. We recovered off that back to gap fill right here, and then it was rejected. Now you're coming into a very pivotal report, not just for Nvidia, but for the entire market. The reason why it's so important for the market is we know that the driving force behind the market has been this momentum trade in AI, data center, all of these other things. Now, if Nvidia can come through with great numbers, then the stock could rally up. First resistance is going to be right here again, right around 143-ish, give or take. Okay, so that would be first resistance. If by some chance they blow the numbers out so much that the stock goes even higher, 157 would be my next level. Now, on the other side, let's say they disappoint. This is kind of the really bearish case for the market if it did happen. If we come down to 119, and we're trading right now pre-market about 130, so it's about $11 lower. But if we break 119 here, which will be support, but let's just say we break it, now you've broken what we talk about as a long-term trend, right? The long-term trend on Nvidia would be broken. And honestly, at that point, I'd start thinking that the August lows of $90 would be back in the cards on Nvidia. Now, a lot of you guys would look at me and saying, okay, well, where's the trade here? Do we go long into earnings or do we go short into earnings? And I'm here to say that for me, I'm not doing either because I don't have a good read. Look, you're not at support and you're not at resistance. You're kind of right in between here, right? So the idea is that unless you can look at this chart and imagine you're presenting a thesis in front of a panel of the best traders in the world, and you can justify that trade based on X, Y, and Z, not like, oh, I think it'll go up or, oh, I think it'll go down. That doesn't cut it in this world of trading. You have to have factors. Factors would be like, oh, it just hit gap fill. It just went into a key support, 618 Fibonacci retrace. You know, you want multiple factors like that. Then there might be a trade going into earnings. Aside from that, what I'm going to do is I'm going to watch this in the earnings trader, which is now part of the Smart Money Stocks and ETFs service. We're going to be trading this in the after hours, but we're going to trade the reaction. So if it pops here, we might go short, or if it gets up here, the same thing here, we might consider going long or a double bottom right down here around 115. But ultimately, I want to trade the reaction because I don't have a good enough read about what is going to happen on the announcement. All right. And again, for those of you out there that, again, might have missed it, it's at 420. Supposedly, they will release at 420. Now, pre-market, we're seeing some movers here. Movers and shakers. This is Intuit. Intuit reported earnings yesterday after the bell. Notice how thin it is. You can see when you get these little tiny dots on the screen, very tiny candles. That's just being very thin. Makes it very hard to day trade this, at least after hours or pre-market. In terms of the chart, notice how it was in this steep downtrend. And so essentially the bar for earnings was lower because it had already been selling off. Essentially, there had been individuals thinking, oh boy, this is going to be a bad report. And then it wasn't so bad. So the stock is trading up. But in terms of resistance, there's a couple levels I'll be watching today. There's one right here at around 629. Notice this high, this low right here, this low right here. That will be a little bit of a resistance line. And then if we zoom out here and we go all the way back, there's really just a double top up here that would be of interest as well. That's way far above, nothing that I'm going to get that's going to get my attention. So really just this 629 to 630 level. All right, Workday also reported earnings today or yesterday after the bell. These were my levels I discussed in the trading the close yesterday. Take a look at the downsloping trend line here. This is right around that 288 level. And if we flip over, look at this. The highs in the after hours yesterday kissed that 288, 289 level. And again, that was a little resistance. And again, that was that down-sloping trend line. Now, if you go through that level, you have a secondary pivot high right here at 294. That would be your next level. That'll be a level I'm watching for today. On the other hand, again, if eventually, let's say the stock's opening up here, which is where it is, you can see the pre-market right there. If it were to fall, which I don't think it will today, this would be your key support line, pivot lows all the way across, creating this nice, really what this is a wedge pattern, right? A wedge pattern, a down-sloping line, an up-sloping line, and then price has to figure out, is it going to break out or is it going to break to the downside? Now, SMCI having a big bounce today. This is a cool chart, guys, because this stock was one of the hottest stocks, rallying from $26 all the way up to $66. Then it fell going into their release of their financials, their backdated financials that, again, they had to get out before they got delisted. And sure enough, they got those out. So there is a relief rally happening. Now, the one thing I want to show you is, remember we just talked about early on like a 618 retrace after a big fall? Well, I want to show you something here. So if we look at this and we do from the high here, do a Fibonacci down to the low. So basically, we're looking at what retrace. $58 is the 618. Well, if we go to the 10-minute chart, look at the high right here is right at 58. That's where it went to in the after hours and pre-market, and that's where it's pulled back from. The 618, for the record, guys, the 618 Fibonacci is my favorite Fibonacci retrace. Doesn't mean the other ones don't work. I just find that one to be the most consequential in terms of finding levels where if it falls sharply and then bounces, oftentimes you'll see the 618 tagged and then it starts falling again. All right, one other stock to just take a look at here. Take a look at this. Wow, APP is getting annihilated here in the pre-market. This stock had already fallen down sharply. Look at this, all the way down here. It looked like it was going to bounce. There must be some news this morning, and I'm not privy to it, but look at where it's trading. See this bigger parallel channel right around 325? That is absolutely remarkable here, folks. Again, 325 is some interesting support levels right down here. And look at the drop on APP. Actually, this actually looks like a very interesting level down here, mainly because it's the low end of the parallel channel. So let's keep a very close eye on this today, guys. I would say anything between 325 and 310. You have the lows right here. But this one is a good example that nothing is infallible, right? A normal trader would look at this and say, okay, this is probably going to bounce. It just filled the gap after being as high as 525. It's come back in. You should see a little bounce. Instead, when news hits, it can just disrupt the chart and you could see a big flush to the downside. Now, I do have this short with members of Smart Money stock, so that's looking good for us. But nonetheless, we'll have to see if there's a day tradable opportunity here in the session. All right, going to a couple other charts here. If we take a look at Bitcoin, we know that Bitcoin had some major technical damage and it is on the decline again today. So let's go to the big board and take a look at this. And what we see right here, guys, take a look. So Bitcoin, again, we closed below 92, we confirmed, and we're seeing continuation to the downside. And this is what we always fear, right? Well, you don't necessarily fear it unless you're long. But point being is that when a support breaks, especially a support that we've kind of bounced on so many times, over and over again, right? Over and over again, that wall is getting weaker and weaker. And when it gives way, essentially this is building energy in here. When it gives way, it has a tendency to fall very sharply. And now we're trading right around, looks like 86,000. Not that far away from the next major support around 75 to 74,000, which is this trend line right here. So listen, you'll have a few bounces along the way, I'm sure of it, but at the same time, I will be awaiting an interested swing trader at around the $75,000 level, all right? And again, maybe a little bit below that as the technical level is just below. Now, if we go to the gold chart here, let's take a look at gold. Gold, again, is down today just a little bit, kind of like Bitcoin, in fact, coming down just a little bit here, even in spite of the stock market being up. But let's see if the stock market can hold its gains today. That's going to be very interesting. If we do continue to flush on gold, the big support is 27.90, guys, right here. That should be a buying opportunity. And then you have the upsloping parallel line here that's just a little bit below that. Silver, again, we know silver's been weaker. Today it's down slightly on the day. There is a little bit of support here, but again, overall, for me looking at this chart, I say, okay, it's weak, Gold is due for a correction. Silver obviously could correct even more. I know people don't want to see this, but this would be my buying opportunity down here around 28, retrace to this trend line. Now, a lot of people would say, oh, it might not get there. And you're right, it might not. That's okay with me. If I miss a trade, there's always another trade coming around the corner. I don't really care. I'd rather get the best fills possible, or at least what I think is the best trading opportunities versus jumping in too early. Okay? Lastly, let's just quickly go through oil and natural gas here as we continue through. Oil today flat, still watching the $66 level down here. And natural gas has kind of been chopping around this morning, but is starting to come back in. And I still have a short on this with commodity members. Down move inside bar. I think this rolls over and starts heading down into this 320-ish low end of this parallel channel right here. All right, so listen, lots to go over today. We got some interesting possible trading action on some APP. We're going to watch that SMCI move. Let's see what Palantir does today. Does it flush into that key level as well? Again, all things to watch. And then, of course, after the bell, we have Nvidia. I will keep you guys posted. Thank you so much for tuning in. I'll talk to you soon. Take care.